The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom O'Brien's out tonight. I'm here alone, but we're going to get through the hour. Record territory yet again. We could start a recording for this show, I believe 7th or 8th day that we are getting record trading in the S&Ps. Pretty remarkable. Dow Jones right now up 160 points, trading at 29,188. S&P's up 16 points, trading at 3305. Get the NASDAQ up 72 points, trading at 9330. And the Russell 2000 leading the way. Don't often comment on the Russell, but have to when it's up more than a full percent, up 17 points, trading at 1700 on the dot. We'll start things off as I started off the update at 10 a.m. The VIX this morning, very muted price levels in terms of a volatility index. If you need insurance, you want insurance on your portfolio, if you're playing that option market, we had an 1178 VIX this morning pre-market. We're talking about a 1216 volatility index. Even if you back things up, 1382, we got a spike on Tuesday when we saw an acceleration to a bit of lower prices, but the market just shakes it off like anything else. As we get into things, we'll start it off with the news of the day. Morgan Stanley continuing quite a trend for bank earnings this week as they crush it out of the park. Morgan Stanley up as much as 7% this morning. The headline number, a massive beat on fourth quarter profit. And boy, oh boy, when you get into the numbers, here we go. The bank said Thursday that fourth quarter profit surged 46% to $2.24 billion or $1.30 a share. They were looking for under $1 a share. So that's quite a beat. Revenue climbed 27% to $10.86 billion, exceeding estimates by more than $1 billion. Not bad. When you beat profits, revenue by $1 billion in 90 days. The firm's smallest division, investment management, exceeded expectations by the most. The business produced $1.36 billion in revenue, almost 100% more than a year earlier, exceeding the $783 million estimate by more than $500 million. I mean, you almost can't overstate the type of beat that is when the market is looking for your smallest division, investment management, to pull in $783 million in revenue, and you crush it out of the park with $1.36 billion. Shares of the firm surged, taking a leg higher after the bank disclosed new, more ambitious financial targets. So getting into it, the bank said fourth quarter profit surged 46% to $2.24 billion, translating to $1.30 a share. The estimate was about 99 cents. Revenue climbing that 27% to $10.86 billion. The estimate was 9.7. We delivered strong quarterly earnings across all of our businesses, the CEO, James Gorman, said. Firm-wide revenues were over $10 billion for the fourth consecutive quarter, resulting in record full-year revenues and net income. This consistent performance met all of our stated performance targets, and in a quarter in which competitors J.P. Morgan and Goldman Sachs posted huge rebounds in fixed income, analysts wanted to see if Morgan Stanley would follow suit, and boy, oh boy, did they. Bond trading helped power the firm's institutional securities division to a 32% jump in revenue to $5.05 billion. The estimate only $4.46. Fixed income trading producing $1.27 billion compared with a $933 million estimate. It is remarkable across the board what these banks did in the last 90 days when you talk about bond trading. Equity trading revenue essentially matched expectations at $1.92 billion, as did investment banking. At the firm's massive wealth management division, which is a huge one at Morgan Stanley in particular, revenue rose 11% to $4.58 billion, edging out the $4.39 billion estimate. And that wealth management division, that is a very sticky recurring revenue number. So that's not something that has the volatility that some of these trading numbers might. You have wealth management, you have client money. That's a number that's going to continue into the future. But it was the firm's smallest division, investment management, as they said, that exceeded by the most, driving the company's overall beat. That business produced $1.36 billion, almost 100% more than the 783 as we covered. That appears to be driven by a single investment. Morgan Stanley cited $670 million in investment revenue on carried interest from an IPO in Asia. Not a bad investment. I guess that turned out to be whatever it is. The quarter also included $158 million tax benefit and severance cost of $172. Last month, Morgan Stanley cut roughly 2% of its workforce due to uncertain global economic outlook, a cull that hit the technology and operations roles the hardest. In his decade at top of Morgan Stanley, Gorman has tilted the bank toward wealth management and overhauled its once struggling bond trading division. For instance, last year, the bank targeted a return on average tangible equity as high as 14.5%. The bank's long-term aspirations, 15 to 17%. So jumping over, lots of numbers there, but the real thing that matters is check out that chart. Pairing some of those gains, I'll drill it down to a 5-minute chart, and this is a little bit delayed. But you have the numbers coming out at about 7 a.m. this morning, and as you see it, 1.3 the actual, 1.02 the estimate. Always love the Thinkorswim charts where you can see exactly where they come out. Then you get to see exactly when the earnings call begins, 7:30 a.m. and Central Time. That's 8:30 a.m. Eastern Time. But Morgan Stanley holding steady, 5.78%. Checking in on some of the other banks that delivered earlier in the week. J.P. Morgan started things off with quite a beat. They are marginally higher this morning. You had Bank of America yesterday trading lower. Goldman Sachs extending their gains today, up about 0.8%. There we go. That was the volatility on yesterday. And other banks we have out today. Charles Schwab, a little bit of volatility pre-market on their earnings. Let's drill this down. So their numbers out at 8:45 a.m. Eastern Time. The actual was 62 cents on earnings. Looks like the estimate was around 67 cents, but the market liking things once we open at about 1.28%. And as I jump around, I'm just going to pull up here because I had my morning market update from Monday. And this had, I mean, look at all these earnings that we've gotten this week, and it's been across the board beats. But this morning, Schwab, Morgan Stanley. So let's check out STI and Ozark, which are also out. STI. Come on. It's thinking. Maybe it's not cooperating. We'll go to Ozarks then. Ozarks, looks like they beat as well, up about 1%. So their numbers out last night after the bell, trading at about $30.33 so far. Jumping over to tomorrow in terms of what we have for the remainder of the week, Regions Financial, State Street, and CFG. Let's see how some of those are reacting, because all of these banks really factoring in all of these beats, because if your competitors are doing it, you're probably doing it as well. There's Regions up today about 1.2%. And what did I say? We have STT, State Street, actually down 2%. And that's City Financial. Citizens up 0.2% on those numbers. Stay tuned, folks. I'll be coming back. We get natural gas numbers at 10:30. We'll be checking out that market as this market just chugs on across the board. Dow up 170 right now, 29,200 on the dot. S&P's positive by 18 at 3307. NASDAQ positive by 80 points at 93.38. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tommy O'Brien coming to you live from TFNN headquarters in St. Petersburg, Florida. Tom's out today. Dow Jones up 170 right now. S&P's positive by 17. NASDAQ positive by 75. Jumping around to some of the stocks with some action today. How about Spirit Airlines? Up almost 9%. They came out saying things aren't going to be as bad as they thought they might be on their guidance. Pretty remarkable run there, though. $42.99 right now. Closed yesterday under $40. You have Netflix shares getting a downgrade, down about 0.4%. And let's find their downgrade. Where are they? Was it Morgan Stanley? Nope, that's Tesla. All right, we'll find them. We got a lot of action here. All right, I'll have to dig in on which one. Where are they? There they go. No, okay. Alcoa, though. Alcoa with their earnings as well, AA, and not what the market is liking. So last night they come out with their earnings at 410. They lose 31 cents. The estimate was a loss of 19 cents. They jump on a conference call at about 5 p.m. Eastern time. Doesn't seem to react too much, but boy, oh boy, opens at around 1975. Alcoa has sold off to 1860, down almost 8% on the day. Other news out there in the market. Goldman Sachs dumping its entire stake in Uber last year. The news on Uber, I mean, it just continues to be tough news all around. Doesn't mean the company won't be around and succeed in the future. But you had the founder, Kalanick, of course, dumping his entire stake. That story persisting. Goldman Sachs sold its entire stake in the ride-hailing giant Uber in the fourth quarter, according to a person with direct knowledge. The sale, which likely resulted in a large gain for the early investor in Uber, helped Goldman beat analyst expectations for revenue. It couldn't be immediately determined why the bank sold its stake. Well, I would guess that they thought they could make more money with that investment money somewhere else. Otherwise, they would be in there. But in the past, the bank's public and private stakes in companies such as Uber and WeWork have caused volatility in quarterly results. Goldman sold its entire stake in the fourth quarter. The sale, as we said, resulted in a large gain. It appears Goldman, which reported earnings Wednesday, sold at the earliest opportunity. Uber's post-IPO lockup period for the share ended early in November. Goldman took advantage of harvesting opportunities in the quarter by selling some of its holdings, the CFO told analysts Wednesday. He added the bank would continue to pair investments in public companies, which totaled $2.4 billion at the end of the year. Jumping over to Uber shares, down this morning about 1.5%. And to put this in a longer time frame chart, pretty tough going for Uber. As you go public, you trade up to 47. Your market falls out to 25. We've caught a little bit of a bid since then. This is a weekly chart. And to compare it to Lyft, of course, the first stock to go public, as they really had some problems. Lyft, 88.60, the high in April. Just been hanging around the 30s and 40s since then. All right, it is Thursday. We get natural gas numbers at 10:30 a.m. Eastern Time. It's 10:21 right now. I'm going to refresh this real quick. We're going to get to commodities, call spreads. We're going to get into natural gas. We are looking at the February contract. Natural gas, boy, oh boy, talk about struggling to find a bid in this market. Some volatility everywhere. We're trading at 213.4. Again, we're looking at the February contract. Backing this up a bit. You see the fall from Tuesday. We were as high at 9:30 a.m. on Tuesday at 225. Fast forward 24 hours later, we're trading at 211. That is quite a drop off, about 15 cents from Tuesday morning to Wednesday morning. Just been hanging at that level since then. 213.45. Now, these usually trade on the nickel, so we're going to have exposure possibilities from 215, 205, 195. We're right up there near 213.5. Not really going to work if we want a volatility trade in terms of where we're going to get action on this, because we actually only have possibility of 215. Now, you could make this trade. The problem being is that here's our bullish spread from 215 to 235. The contract is trading at 213.5, so we're about a penny and a half under this spread. Now, right away, folks, there is a huge bid-offer spread in this. I'm not sure I've seen one this big. I would call that untradeable, okay? You're talking about a spread from 215 to 217.7. That's almost a 3-penny spread. I would call that untradeable. Nadek's got to get that together because I'm not touching that. You probably shouldn't be either. And you can see the bid-offer spreads here just gigantic. Let's see if that changes as we get into the noon. Nope, it's going to be the same thing. So really not going to be a market that you probably want to touch. Same spread, 215 to 235. And again, the bid is one tick essentially over that. Now, of course, I would love to buy this at 215.1. That's what the market maker's saying. But I'm not going to be buying it on the offer at 217.7 when some market maker is out there saying, and to put this in context, all right, that's what the market maker's giving themselves for a risk reward. They're risking one to make 199, as in they're risking one tick, the 215.1, for profit up to 235, and their max loss is that one tick. You, on the other hand, would be risking 27 to make 173. To put things in context, you're risking 1 to make 7. They're risking 1 to make 199. Just be aware of those types of spreads when they exist. So not really the market you want to go to there. And let's see if these dailies change at all. So here's where things tighten up at least a little bit. Looks like we're getting about 2. Still, just like a gigantic spread. And maybe that's the volatility persisting. But here's a 210 to 250 spread, just for some context. I mean, just a gigantic 2.5 pennies in the natural gas contract for bid offer, because realistically, if you're trading this till 2:30, you want the ability to buy it and potentially sell it during the hour, during the day. And if you are buying and selling, you're losing 2.5 pennies just for the bid offer spread. And boy, oh boy, you really got to be a genius in the market if you're paying 2.5 pennies in natural gas just to buy and sell it. You can always hold it until expiration, which means that, you're not going to pay the spread on getting the when getting out. But boy, oh boy, that's quite a market, and I would stay away from that one right now. Let's just jump around on crude oil. We always look at this market on inventory day, but of course, if you're looking for a defined risk, let's see where we're trading at right now, because here's going to be a market that's at least tradable in terms of having a bid-offer spread. So let's say if you can see that even we're trading at 58.44 right now. And this is more like it, 3 pennies, all right? 3 pennies in the price of crude. We're trading at 58.44. Now, this is where things get cool. This is a nice trade. If you're bullish oil, 58 to 59.50. These are always the trades that I actually liked on Nadex that you could potentially make some money. The binaries, I'm not sure how you do it. The spreads, if you're dealing with a bid-offer spread like we just looked at natural gas, I'm not sure how you do it again. But this, you're buying it at 58.46. The contract's at 58.44. So you're paying 2 ticks above the contract. But for that ability, you're locking in better than a 2-to-1 risk reward, where your losses are capped at 58, your gains are capped at 59.50. This is only for a half hour, but you're paying 2 pennies to lock in those losses at 58. I mean, oil has had some volatility. To pull this up just since this morning, right? I mean, look at this. At 4 a.m., 58.32. You trade down to 57.56. That's about 80 pennies. And boy, oh boy, since then, we're up almost a full dollar from 7:30 until 10:30, over 3 hours. And if you want to go out till 2:30, I mean, similar action. You got to love when you see a bid offer spread by 2 pennies and you can get into that contract. Something to keep in mind. Stay tuned, folks. We'll be coming back with those natural gas numbers. We'll pull up some of the movers and shakers in the market. We'll go over what we have for earnings tomorrow, along with what we have going on for earnings next week. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Pulling up this natural gas contract. We'll pull up the numbers, but I'm guessing that we see a little bit less stockpiles than the market expecting. As you see, natural gas, we were just trading at 213.5. Nice 3-penny pop to the upside on natural gas, now trading 216.5. I believe the forecast coming into this week was for quite a draw of about 95 billion cubic feet. And jumping around to see if I can get that number as we pull it up, you have natural gas. Looks like a decline of 109 from first estimates. So as you would expect, the estimate was a decline of about 95 billion cubic feet. That number coming in, a decline of 109 billion cubic feet. Natural gas catching a little bit of a bid, but again, to put things in context, you back things up to Tuesday morning. 48 hours ago, we were trading at 225. We reach a low of 211, and as we know, if you follow this program and you watch these EIA numbers come in, the first move is not always the move that lasts, but natural gas up about 3 pennies on that EIA number of a decline of 109 billion cubic feet. Jumping around to other stories. This one, pretty remarkable. WeWork. We talked about Uber, a lot of negative press recently. They're getting WeWork. My goodness, their leasing activity plunging 93% in the fourth quarter after failed IPO attempt. WeWork only signed 4 new leases in the U.S. in the fourth quarter as the company reeled in expenses following the SoftBank-led bailout. Total space lease dropped to 184,000 square feet from an average of 2.54 million square feet over the previous 4 quarters. I mean, that's remarkable, right? You have the space leased dropping to 184,000 from an average of 2.54 million. WeWork exceeded the top spot in flexible office space leasing market to Spaces, which is owned by IWG, after pulling its much-hyped IPO late last year and raising emergency funding from SoftBank. WeWork's leasing activity in the fourth quarter slowed to a crawl. The company signed only 4 leases, covering 184,000 square feet of space in the last 3 months, marking a 93% drop from that average of 2.54 over the previous 4 quarters. With such a dramatic slowdown, WeWork ceded that top spot in flexible office space leasing to Spaces owned by Regus parent IWG, which increased its new lease footprint by 11% to 284,000 square feet in the period from its 4-quarter average. WeWork's pullback reflects a downsizing of the business after SoftBank took over 80% control in October with a $5 billion financing package that kept the company afloat. The next month, WeWork announced 2,400 job cuts, or about 19% of its total workforce. I mean, you got to keep in mind when you read all this stuff, they were trying to push this company out to the public at $50 billion, $60 billion, $70 billion market cap. It ended up getting pushed down to $15 billion. The number might have been 7 or 8. They really thought it might have been valued at if they pushed it out to the market for a fair value. The industry-wide numbers from CBRE show how much WeWork had come to dominate the co-working space market, fueled by billions of dollars in equity funding from SoftBank. Newly leased space in the flexible office leasing market plummeted 75% in the fourth quarter to just under 1 million square feet from 3.95 million in the period prior, and WeWork's share dropped to 18% from 69%. Manhattan, still the largest market, even as new space lease dropped 82% to 187,000 square feet from over 1 million. Activity in Chicago fell 89%. Boston and LA saw declines of 84 and 75%. We had seen this coming right after the IPO news, said one research director of research at CBRE. 2 of WeWork's projects in the quarter were in Manhattan, 1 in San Francisco, the 4th in Philadelphia. Let's see, shifting market. But there are ways to structure co-working leases that differ from WeWork's model of taking control of large buildings, branding them WeWork, and renting out everything from individual desks all the way up to spaces for hundreds of thousands or thousands of employees. Whelan said landlords are looking for opportunities to closely partner with office space providers, do it themselves, or sign management agreements. It's a rapidly changing landscape out there. And one of the biggest problems the market seemed to have with WeWork was the value they were putting on that company in terms of their earnings, in terms of the multiple, pricing it as a quote-unquote technology company. That's what WeWork wanted. The market wanted to price it as a real estate company. Looks like the market seemed to be accurate, and that's why they pulled things back. But just a remarkable story in terms of how much of a decline they saw. Other news out there. New Tesla registrations in California nearly halved in the first quarter. So Tesla, quite a run recently, and I'll give you a couple headlines here before we get into it. Also out this morning, Tesla shares falling after Morgan Stanley recommends dumping the stock. In fairness, they recommend dumping it at 500 plus because of the run that it's had. some of the details in that, saying that basically the run that they're going to have in China is priced in, lowering its rating on Tesla on Thursday, and said it thinks investors will be presented with a better chance to buy the stock in the future. They downgraded it to underweight from equal weight. At the same time, it raised its price target to $360 from $250 to account for the rally in the stock. The shares have doubled in the last 6 months and closed Wednesday at $518.50. And then this story here having to do with Tesla registrations in California nearly halved in the fourth quarter. Tesla's overall vehicle registrations nearly halved in the U.S. state of California during the fourth quarter, according to a report which collates data from state motor vehicle records. The massive drop comes as tax credit for Tesla buyers ended in 2019. It had fallen to $37.50 at the start of the year. It halved to $18.75 in July. An existing $7,500 U.S. tax credit for electric vehicles, which allows taxpayers to deduct a part of the cost of buying an electric car, phases out over 15 months once automakers hit 200,000 cumulative EV sales, which Tesla hit in July of 2018. So to see how that is hitting the Tesla shares. And that's a long-term chart, all right? That's a weekly. Talk about putting things in context. Now, as it said, Morgan Stanley had a 250 price target on that stock. Well, that was okay up until October 14th, but boy, oh boy, did they miss quite a run. 250 up to 500, up to 547. You drill this down on a shorter time frame, though, today, you can see the gap, whether it's last night, you go from closing at about 518, you open at about 493, and we're still down about 3.5%. But boy, oh boy, quite a run for Tesla, quite a run for Elon Musk, and I believe $100 billion market cap puts that price tag at about $554. That would release the first tranche of money and part of Elon's just amazing pay package. He would need to sustain that for about 6 months. But nonetheless, he has many shares himself that have nothing to do with his pay package, and he has made billions in this run in the last 3 months. Other news out there, Treasury yields climbing on strong economic data. So we haven't gotten into it yet this morning, but jobs data, lots going on. We got jobs data, weekly jobless claims out this morning, 204,000, lower than the 216,000 that were expected. Just continual signs of this market pressing on in terms of a strong economy. So the yield on the benchmark 10-year Treasury note, which moves inversely to price, was higher at around 1.797%, right at about 1.8%. Yield on the 30-year also higher, 2.248%. Yields popped after data from the Commerce Department showed retail sales, that as well, 3.3% in December, matching analyst expectations. The net of data leaves macro narrative unchanged and clears the way for another melt-up in yields and domestic equities. Well, we're seeing it right now, folks, as the S&P pulling it up. Quite a run. 3308 this morning, just off that level. And look at this. These are 5-minute bars we're looking at, folks. We just had a new all-time high in the last 5 minutes. Stay tuned. We'll be right back.
If you are in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Markets at all-time highs. S&P's up 18 points, 3307. NASDAQ up 70 points, 9327. You get the Dow up 181, trading 29,211. When's that 30,000 price point? Seems like at this rate, it's only a matter of a few days. All the markets in between about 0.5%, being the S&P in the positive, and Russell now positive by 1.1%, up 18 points at 1701. Checking in on the VIX as this market just charges higher. VIX, pretty interesting that the VIX actually going up as this market goes up. Not quite usually as you would see that. And then oil market right now, 58.44, and jumping over to the gold market as well, 15.51. Gold pulling back a bit as we've seen the market charge higher. In terms of what else we have happening in the market, we have the China deal. Phase 1 yesterday, getting into the specifics of what China agreed to. China agreeing to purchase an additional $200 billion in U.S. goods over the next 2 years as part of that Phase 1 trade deal. The real meat of this is going to be how we actually police that, how we make sure it gets done, and what happens if China does not live up to what they've just said. The additional purchases will come on top of the 2017 U.S. export numbers. The deal stipulates that Beijing will buy $77 billion in additional goods and services in 2020 and $123 billion in 2021 to meet the total of $200 billion. China bought $186 billion in U.S. goods and services in 2017. To put it in context, right, these numbers, $200 billion extra over 2017 numbers, they only bought $186 billion in 2017. Combined with the new incremental agreement, U.S. exports to China should, in theory, climb to $263 billion in 2020 and $309 billion in 2021. Either amount would mark a record-breaking acceleration for U.S. exports to China. It'll be interesting to see if they can make it happen because those are some big numbers. The composition of that additional $200 billion is as follows. Manufacturing, $32.9 billion in 2020, $44.8 in 2021. Agricultural, 12.5 in 2020, 19.5 in 2021. Energy, 18.5 this year, 33.9 in 2021. And services, 12.8 billion this year, 25.1 billion in 2021. Just mammoth numbers in terms of this is additional goods as opposed to 2017 numbers. Manufactured goods include industrial equipment, electrical equipment, pharmaceutical products, vehicles, optical instruments. Agriculturals include oilseeds, meat, cereals, cotton, and seafood. Digging deeper, China agreed to purchase a variety of goods from each major industry, including, but not limited to, the following, and there's your list right there. So agricultural, going down the line. You have energy as well, manufacturing services. The takeaway I get from this, huge numbers. Not sure if they can live up to that because, boy, oh boy, they're just percentage-wise, mammoth over what they did in 2017. What else we have? It is still earnings season. Checking in on earnings that we have tomorrow coming out. We still get some of the banks. You have Citizens Financial, State Street, Regions Financial. Other news, other earnings coming out. JB Hunt, Fastenal, First Horizon, Kansas City Southern, Schlumberger, and then fast forwarding to next week to see what we have on the horizon coming out. So for Monday, scanning what we have coming out in the market in terms of Bank Financial Corp, Timberland, Fifth Third. Still banks coming out next Monday as we keep driving things. Enterprise Financial, Heartland Express. There we go. Digging into Tuesday, you can see how things really pick up for earnings, right? 27 companies on Monday, 41 on Tuesday, 63 Wednesday, 70 on Thursday. So Tuesday, seeing if anything jumps out. United Airlines coming out. First Bank Corp. Scanning down the line. Mercantile Bank. Lots of banks still on the horizon as we kick this off. Halliburton, Las Vegas Sands. This is on Tuesday we're talking about. Getting into the numbers on Wednesday, 63 companies reporting. And I just got this by Googling earnings calendar, folks. Yahoo, they have a great earnings calendar. You can dig into it for yourself. Ally Financial, Abbott Labs. This is Wednesday we're talking about. Enterprise Bank Corp, Baker Hughes. Come on, cooperate. Fifth Third Bank. It's amazing how many banks there are just in general. Community Bank. Look at all these banks as we scroll through it. Banks really kick things off early in the season. City Holdings. Netflix, there we go on Wednesday. That will be a big one. Texas Instruments, Johnson & Johnson. We'll scroll up to Thursday, the biggest day of next week with 70 companies coming out with their earnings. American Airlines, JetBlue, starting to get the airlines. And it is amazing. I mean, look at all these banks. A lot of them small regional banks, but Glacier Bancorp, Banking, Equity Bank Shares, East West Bancorp, Connection One Bancorp. Amazing how many banks, public companies. Looking for some of the biggers and shakers. Procter & Gamble coming out with theirs on Thursday. E-Trade, Travelers, Comcast, Intel, really getting into some big juggernauts. VF Corp, Heritage Financial, and let's see what we have for Friday as we pair things back on Friday to only 16 companies. American Express, pretty interesting. Both American Express and Visa trading higher yesterday on that trade deal, Phase 1 trade deal. And looks like that's one of the biggest ones out there. Checking in on some of those technology stocks. We'll kick it off with Netflix. So we get their earnings next week. Netflix pulling back a bit, down about 1/3%. They've had quite a run recently. Checking in on Apple, the stock that just does not seem to pull back. To put this on a little bit of a longer time frame, there's your last year. Quite a run from $151 to now $315. Drilling it back in a shorter time frame, 15-minute chart. That is a bad tick. Nobody was trading Apple at $263 at the end of trading yesterday. $314.60 right now. Amazon up about 2/3%, trading at $18.74. And I'm going to jump over to some of the cannabis stocks because, boy, oh boy, they may have found a bottom. We have gotten quite an acceleration. We had calls on some of these, of course, throughout the program, but putting this on a daily, quite a run to the negative side that these stocks have had. But boy, oh boy, you look at this from the lows that we made in the middle of November. I mean, quite a charge higher. This is Canopy, the biggest player out there probably. We're now trading at about $25. You back things up just to the 13th, which I believe was Monday. We were trading at $20, all right? Kronos, another big player in the market, similar charting action. We make a low in the middle of November. From there, we consolidate a bit. The beginning of January, you had Kronos just go from $650 up to almost $850. Constellation, now they have a decent stake in Canopy as well. They are the makers of Corona, as well as some other liquors, but check them out, right? Middle of November, we're down at 174. Now, this is a much lower volatility play because no matter what happens, everybody's going to be drinking Corona still on the beaches of Mexico and the U.S., wherever you be. But we were down at 175, and just like that, you got Constellation up almost 10%, trading at 191.15 as the cannabis stocks may be done with their max pain finding a bid. Stay tuned, folks. Come back to wrap up the show. We'll check in on Bitcoin. So we've had some runs in that crypto market. Stay tuned. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow up 170, S&P's up 16, NASDAQ up about 60 points. All the markets kind of hanging in record territory for the hour. Jumping over to Bitcoin, quite a number. Talk about hanging at records. Not quite a record, but it seems like it's quite an acceleration from under 7,000. Bitcoin now trading 86.77. And let's put this on a little bit of a longer time frame. What are we looking at right here? And let's change it from an hourly. We're going to put this on a daily for some context, and there we go. Just in the middle of December, we were at 6,500. If you back things up to even January 2nd, we were under 7,000. And check out that charge higher on the 13th of January, Bitcoin finding a little bit of acceleration. What else? I encourage you to check out on the front page of TFNN, doing a morning market report. And starting on Tuesday, I'm going to be doing a program at 8:30, the morning market kickoff. So 8:30 a.m. till 9, right ahead of Larry. We'll just be talking about what we have going on in the market. That'll be live on Tiger TV. Of course, we all get a break. Monday, Martin Luther King Day, long weekend. Looking forward to that. Get some rest and relaxation. Tuesday morning, we'll kick that off live at 8:30 in the morning with the morning market kickoff. And I encourage you to check out these reports just because it's earnings season. We got a lot to talk about. This morning, of course, you had Morgan Stanley shares. That's the chart of them pre-market. Weekly jobless numbers, Tesla on their downgrade. And to back things up, I mean, I'm going to do something similar probably for next week. That was Monday's report on the 13th, just to get a full feel of all those bank earnings. And we're all the way through. We only got 3 left. The week is flying. We'll see where we wrap it up. And to check back in on the markets, there's your S&P, putting in a little bit shorter time frame. 3308.75, currently trading at 3305. And one more check on natural gas. Pairing some of those gains, made it all the way up to almost 217, but just like that, we're back under 215 in that February contract. Stay tuned, folks. We got Fast Market coming up next. Thinkorswim, Kevin Hinks and the team. Then Steve Rhodes live at 1, Dave White live at 2, and Larry Pezzimento live at 3 for Tom this afternoon. We'll be right back.